Hello, hello. Happy Sunday, everyone. Hope you guys are doing well. Hope you guys are having a great weekend. Let's get a audio check. Hello, hello. Happy Sunday, everyone. Hope you guys are doing well. Hope you guys are having a great weekend. Alrighty, guys. We are good to go. Ready to be locked in with you guys here ahead of the new week. Who's ready to get down to the business? Talk about the money-making stuff. Unicorn Queen, good Sunday. Hope you guys are doing well. Alessandro, hello, hello. Jeff, happy Sunday, my man. Eslam, hello. Dylan, glad to be here. Strat King, we're early today. Yes, sir. Yes, sir. And I see, about an hour early today. Got some personal things to attend to. Dog's not doing that well, so having to take care of her, get her to the vet and whatnot. So we're here an hour early with the regularly scheduled programming. So with that in mind, recording will always be available for those of you guys that weren't able to get here the hour early. But starting next week, we'll be back to the usual business hours. Eslam, thank you very much. 555. Michael, hello, hello. Silver Bullet Trader, hi Dylan. Cyro, hey brother, how are you? I'm doing just good, man. We're keeping things pushing. We're keeping things pushing. Jose, buenas tardes y gracias por tu tiempo. Mi placer, mi placer. Star Moon, hello, good day. All right, guys, ready to get down to it here today. Appreciate you guys joining us. Let's get into what we're going to be looking at here for the coming week. Thanks for being with us. My pleasure, Cleo. Reaper, hello, hello. All right, guys, so let's take it from the monthly chart here for US dollar. Not doing a PowerPoint today. I'm a bit crunched for time, but still wanted to make the time to get on here with you guys, let you guys know what I'm looking at, how myself, my team, how we're preparing for the new week, and what it is that we're looking at, right? So with that, we're going to get started with the usual intermarket analysis, starting with US dollar, transitioning into bonds, and going over to the equities or index futures market. Sorry to hear that. Hope she gets better. Yeah, she's doing well. She's doing well, but we're requiring a lot of attention on our end. But all is good. All is good. Appreciate the positive wishes. All right, guys. So with that, let's get into the business here. Finally have equities moving out of the range. I know we've been in that consolidation for about 6 weeks. Not the easiest price action to trade, right? So now that we're leaving that consolidation, looking forward to much cleaner price action here going forward, guys. So starting on the monthly chart here for US dollar, a couple things we're looking at. We got the rotation to the downside here this past week. We have this wick here on the monthly chart. You can see we failed to reach up into the midpoint. And then this next candle open traded higher, couldn't even get to the lower quadrant. And then we started to accelerate, confirming weakness. So what I'll be looking for is for the market to trade down into this monthly fair value gap here. And that's the draw for the monthly time frame. High probability setups are going to occur when you can align the market top down. Monthly, weekly, daily. And then if you use that for your scalping, for intraday trading or swing trading, the probabilities of your trades are going to go through the roof, understanding top-down analysis, right? And that's why I want to make time to show you guys how myself, my team, how we're weighing out all these factors here. So we're looking for continued downside on the monthly time frame for the US dollar. All right, working down into the weekly chart. Let me take that off. A couple things here I want to take your attention to. So we see the market traded higher into the high end of that weekly fair value gap. From there, we then decisively traded down through the midpoint. From there, we then see the body staying in the lower half. I wanted to see how this weekly candle closed because technically the order flow was still strong on the weekly chart based off the support inside this fair value gap, which now that we've closed down below it turns into an inversion fair value gap. You also notice that the market's staying in the lower half of that imbalance, which is not bullish, right? If we're bullish, we want to see the market continue. We want to see the market stay in the upper half and continue. In fact, and the fact of the matter is the market ended up trading lower, staying in the lower half, rotating to the downside. So now that we've closed below this inversion fair value gap here, looking for this swing low here, this sell side liquidity pool that formed in the early part of December. What you'll also notice here on this weekly candlestick, we open traded higher. And I want you to measure this wick here. And you'll notice the market couldn't even get up the lower quadrant, much less the midpoint or consequent encroachment, indicating the market is bearish. And then you can see a heavy down close there. So I'm expecting that to continue going forward. And then we'll be looking for the market to clean out the sell side liquidity here below market price. Dropping down into the daily chart, If you guys will recall last week, this was the level I gave you. So let me take everything off here. This fair value gap here, this sell side imbalance, buy side inefficiency, told you guys to extend that through. And that's going to give you the insight for how this week is going to trade, right? Because if you see, we were in a bit of a range here. So when that's the case, I'm going to let the market tell me where it's going to go. And the level I gave you to do that was this daily fair value gap here. So now putting the annotations back on. And I want to show you guys how this has implications in the equity markets as well. So the fact that the bodies stopped there, market rotated to the downside, and we started seeing heaviness in dollar, allowed me to then start to anticipate higher prices or a breakout on the Nasdaq. So this is how it translates over into the stock market or for equity traders. So looking at the fair value gap here, market trades up into that. Look at the bodies perfectly stopping there. That's algorithmic. Wicks coloring outside the lines, totally appropriate, but the bodies are going to tell you the true story. So once we started breaking down, then it was easy to predict this candle here and here, attacking this sell side here and here. So next draw for the downside, given that we've seen this bearishness here, and if you look at the market structure here, we have an intermediate term high up here. And if you guys remember, not the previous Sunday, but I think the Sunday before, I was explaining how you can use market structure to forecast larger price swings. So the fact that we have this intermediate term high here allows us to then predict a more protracted price run to the downside. So we have an intermediate term high here, market respecting this, creating that lower high, and we're able to use institutional order flow to understand where the swing points are going to form. So we failed to get above this gap here, so we can anticipate that becoming a short-term high and the market breaking down, attacking sell side here and here. So the next draw on the downside will be these 3 consecutive down close candles or bullish order block here. That'll be the first target on the week. I want to see us accelerate down through that based off how weak the market is, and then make a run for this sell side liquidity here, and then that monthly fair value gap that we were looking at. Then once we get there, I'm going to have to reassess, get another lay of the land, and then from there, that'll give me insight for what I'll be looking for longer term. So let's drop down, it's the hourly time frame. So you can see here, once we close down through that weekly fair value gap, market trading up into it, failing to reach it, but hitting this hourly gap here, weak, rotating lower. Market retracing, last 2 up close candles, hits that, aggressively nosedives. So I will be looking for the market to remain below this hourly gap here. I personally don't want to see us deeply retrace because we are so close to that order block here and the sell side here. I wouldn't want to see a deep retracement. It can retrace, and if it does, the highest I'd allow it to go and still be bearish would be this weekly inversion fair value gap. But ideally, we'll do what? Stay in the lower half of it. So we can retrade up into that daily fair value gap that we've created. However, ideally, we'll see the market stay in the lower half. And if we do that, everything's still a green light for lower prices. If we start to trade up through that and lay a body in the upper portion, then I'll have to reassess and see where we're at and again get a lay of the land at that point. So that's what we're looking at top down for US dollar. So I want to go ahead and confirm that with the bond market. So let's go up to the weekly chart. So we did have an SMT divergence on the weekly chart here with this external range liquidity below this low. We did not reach it on the, let me see. Yeah, so on 2 of the treasuries, we did not reach that external range liquidity, whereas on this one we did, and now we're seeing the market pull back up into the range. So as long as we continue to see higher bond prices, that's going to support lower US dollar. Dropping down into the daily time frame, we also see a lower time frame SMT divergence with these lows here. You'll see that the, let me see. See here that the, whoops. All right, so we can see here that the 10-year notes did not get down below this low, whereas the other 2 treasuries did take out that low, and then we got a strong rejection to the upside. So if we were going to see continued bearishness, if you guys recall last week, I was measuring this range here from this high to this low. Market reached up into a premium market here, and then we started to break down. we would have had to have continuously accelerated to the downside for the market to remain bearish. However, since we took out that low, quickly rejected to the upside and created that S&T divergence, that's what allowed me to pivot and then also trust that we're likely going to see further downside on the US dollar. So as long as the SMT holds, we continue bullish, be looking for buy side here, and strength in the treasury market will also support a lower or weaker US dollar. So with that, moving right along into Nasdaq, let's take it from the monthly time frame here. So we're seeing strength for the month of February here. Candle open, traded lower. Have this wick here hitting the midpoint of that wick, strongly accelerating to the upside and closing on the weekly chart above this high here. So what I'll be looking for is all-time highs on the Nasdaq, here labeled buy-side liquidity, and then through that, you guys know all-time high protocols. Keep trusting buy models until the market decisively shows it's weak and breaks down. And that's going to be the game plan here going forward for myself and my team. Looking at the weekly chart here, you guys can see we've been in this range here since mid-December, finally starting to leave the range to the upside. I like the strong close above the swing high, confirming strength. Next draw is going to be the midpoint of that wick, and then again, all-time highs on the upside. Looking at the daily time frame, zoom in. Inside this range for a long time, and if you guys will recall what we were discussing here the past really 4 to 6 weeks, is when the market's in a consolidation, I'm not trying to predict the breakout every single week. I'm just going to let it leave the range. Like I said, we were able to see that the daily bias here was bullish, that the daily candle would expand higher. And I also want to touch on analysis and trading, two very separate things. On my trading for Friday, the bias was straightforward. It was easy to see that the market was going to trade into these highs here and into the remaining portion of that imbalance. However, the way the day delivered didn't allow me to find profit on Friday. So the analysis was dead on, and I'll go into the lower time frames and explain that here in greater detail. But that's going to happen to you as a trader, right? And that's one thing I want to share here with you guys is no matter how good my analysis gets, I always need to have my risk management dialed in. Because no matter how good you get at reading the market, all my targets were delivered on Friday. Everything I was looking for. However, the way the day delivered did not allow me to profit, and actually took 3 stop losses with reduced risk on Friday. However, what I want to take your attention to is how I managed it and how it did not wipe out all my weekly gains on all my accounts. So even though the bias was very straightforward for what I was looking for, you'll see here on the 15-minute time frame, or you can really see it on the 5-minute here. Brutal price delivery here in the morning session. So you can see this is the morning session for Friday. Very difficult price delivery. Although it delivered all the targets we were looking for, I was not able to capitalize on it. So that's something I wanted to share with you guys because I know you guys see me uploading winning trades all the time. Not that I have losing days very often. However, what I do, I like to share that with you guys because I know most people don't really show you the reality of trading, just making money, trying to look good. But I want to show you guys the reality because you're going to run into these days as well. And no matter how good I get as an analyst, no matter how much precision I'm able to have reading the charts, I'm always going to need to have risk management. Because on a day like today, all my targets, or on a day like Friday rather, all targets were delivered. Pre-market analysis, we're looking for higher prices. We want to see this London high here taken out and then close near the high because the daily chart is bullish. However, I was not able to capitalize on it if you see how the day ended up delivering. And what I had to do is take my losses, take it on the chin, and walk away. Because if I would have kept pushing, if I would have taken a 4th trade, a 5th trade, a 6th trade, I would not be consistent and profitable at the end of this month. So I want to share with you guys the actual habits that make me consistent. And it's not just having freak level precision on the charts. It's being able to manage risk when you do take a losing day. How do you manage that and walk away from it? And in the live coaching sessions that I'm doing every day with those that are in the mentorship group, that's the value in being able to see that. Being able to see me win trades, right? Have winning days, but also how do I manage the losing days? How do I not let those losing days wipe out a month's worth of progress, right? And it's those skill sets that if you really focus on that, will allow you to be profitable. For most of you guys, you're able to find winning trades, but the losers eat into the winners. And if you're able to control those losing days really well, it's going to help you find long-term consistency. And I want to show you guys that side of trading so that you guys can adopt these habits for yourself and also find consistency month to month, week to week. So going back up to the daily chart, wanted to throw that in there for you guys. So based off what we were seeing in the US dollar, let me pull that up so you guys can see it comparatively. Right, we started seeing weakness in dollar breaking out to the downside, taking out the sell side, and then we saw the opposite happen in indices, right? This is why we look at that risk on, risk off relationship, because if you're already looking for higher prices on Nasdaq and you see dollar selling off, it's easy money for higher prices. So that's how you're able to weigh out this risk on, risk off relationship. That's going to help you understand where the market's likely to go based off intermarket analysis. And if the business of trading is all probabilities, how do you put the probabilities in your favor? And you put the probabilities in your favor by understanding how these factors come together, how you can apply them when you're reading price action, and take trades in the right direction. Just like I showed you guys, even on Friday, it's not going to be 100%, but if you're trading in the high 60, high 70% strike rate, you will be consistently profitable if you know how to manage your risk. And these are factors that you can use to raise the probabilities of your trade, right? Because even though we're talking about higher time frame, monthly, weekly, daily charts, if you apply this insight to your intraday trading, your scalping, right? Your swing trading, your intraday trades, it's going to raise the probabilities of your trades, make your strike rate better, and allow you to make more money at the end of the week, at the end of the month. So going into the daily chart here, I like how we had a strong close here. A strong close here above this high. We have this fair value gap here. I want to extend this through. And then I like how we closed above the midpoint here. So I want to see us get above this fair value gap here, use it as a reclaimed fair value gap. It's not an inversion fair value gap because it was initially a bullish fair value gap that now we're getting back above. So I want to see this be a reclaimed fair value gap. Market find support here, launch higher, and reach into all-time high valuation. So that's what I'm looking at for Nasdaq. So again, looking for a bullish weekly candle and also looking for a bullish daily chart. Once we get above these highs here, I'm going to have to gauge, is the market strong or are we just trading higher, pricing in a long-term high and then breaking down? Those are all things I'll measure, but right away we got to take it day by day, week by week. Right now we're looking for higher prices. Once we get to these highs, I'll assess, get a lay of the land, see where we're at, and then make an educated guess based off the information we have at that point. Dropping down into the 4-hour chart. So because we've consolidated here for a while and now we're breaking out to the upside, not that I'm a breakout trader, but we've been in a consolidation. So what I do before I have long-term targets is I let the market leave the range, right? I'm not trying to guess when it's going to break out every week. I trade using 15-minute liquidity pools, surgical strikes while we're inside the range. And now that we're leaving that range, I can trust that we're in an expansion profile. So I don't want to see a deep retracement here. It's not necessary because of all the time we spent consolidating here. I want to see it aggressively expand to the upside, clean out this buy side here, and it'll be the same thing for E-mini S&P. Here, lots of liquidity for the taken here on the ES as well. And then once we take out those highs, like I said, I'll be interested to see how we trade, what signatures we get at these highs, and then I can use that to give you guys more longer term targets, more longer term perspective on the indices. So with that, that's everything that I had to cover. Dollar, bonds, indices. All right, so last order of business is crude oil. All right, so I want to touch on the crude oil markets here. These lows here. Look really nice for crude oil here. Market traded higher, cleared out the buy side here and here. And then we got a decisive breakdown here, creating a breakaway gap. I like how they left some of this gap open here, because now I can use that as a measuring gap. So if we're going to, well, price run started here. If we're going to get down into these lows here, I like how at 50% of the anticipated price run, they leave a gap open. That's a measuring gap. That's going to allow me to confirm that the market's going to keep breaking down and then we can clean out those lows here. However, do keep in mind, there's a lot of consolidation back and forth here. So it will likely trade through that range in a high resistance liquidity run. So what I'll do, let's say this was a 5-minute chart or a 1-minute chart and I'm trading this intraday. That's mostly what I'm doing is intraday trading. And I'm looking to trade down into these lows here. what I'll do is, because this is all a balanced price range, which is why it's going to be high resistance liquidity run as it's trading through it, is I'll measure the high and the low of the consolidation range. And then I'll take partials at upper 75% of it and the midpoint of it, because many times it'll trade into that balanced price range, reach midpoint, have deep retracements, then trade down into it. That's what a high resistance liquidity run is. So when that's the case, I'll take partials at levels that make sense. And then if I can get these lows, even better. But that's how I'd attack it if I was trading the crude oil markets. And looking at this on a weekly chart, yeah, really heavy here on crude oil. All right, guys, so I'll take a few questions here. Like I said, I got a lot on my plate here today, so I probably won't be here too long with you guys, but any questions you guys have, I'd be more than happy to get to a few of them here right now. Abraham, happy Sunday, Dylan. Let's get ready for the new week. No doubt, my man. Absolutely. Absolutely, Dylan. Your transparency is what separates you from the clowns in the industry. Really appreciate that. I try my hardest to show you guys the reality of trading. No bullshit. What actually goes into making money, right? And it's not all winning trades every single day. Many times it's knowing how to walk away, knowing how to step away when the odds aren't in your favor, right? Again, trading is a probabilities game. If you can identify that one trading day or one trading session, the odds aren't in your favor, the worst thing you can do is lose control of yourself emotionally and keep pushing in a day that's low probability. That's how you're going to dull your edge, reduce your strike rate, and make trading stressful and make it way more than it needs to be than if you just followed a proven plan and a proven process. Alessandro, do you consider the Dow for correlation? That's a good question. It's in the back of my mind. As I'm trading intraday, I'm absolutely monitoring, are the markets in sync? Are they symmetrical? Or are they decoupled? So it's something I use intraday. I don't use the Dow as much for my analysis because Dow is just all over the place, as you'll see here. Let's go to the daily chart. Like here we can see clearly, right? Nasdaq bullish, S&P bullish, and the Dow had a down close that day. So many times the Dow has been decoupled from the other averages, especially as of recent. So Dow's not something I'm weighing too heavily in my analysis personally, and not on the higher time frame for macro analysis, which is more so what I'm sharing here with you guys. Sky, hey Dylan, just want to know if you could find the time to make a video on how you manage risk and how to understand that you need to step away, or just a brief explanation. Absolutely, yeah, appreciate the support. Most definitely, that's something I'll look to do. I want to, as I start to get things moving forward here with the mentorship group that I'm working with, that demands a lot of my attention, making the videos at the standard I want them, the presentations, the PowerPoint, so it takes a lot out of me. So to not dilute my attention, that's why I haven't been too active on YouTube. But it is my intention that once I get the ball rolling more so in that direction, with those that I'm working with and that I'm coaching to profitability, I will then take more time to do things on the YouTube side. But right now, I don't want to dilute my attention. Focus is power, especially in this day and age where everyone's distracted all day long. If you can remain focused, it's a superpower. So that's what I'm doing right now. Over time, though, I will be transitioning over to YouTube and doing value pack stuff for you guys on that side as well. So it's absolutely my intention. And I will be covering lots of things on the YouTube, a lot of things I'm excited to share with you guys. But right now, I got to stay locked in with what I'm doing and do what we do best, deliver results. Omar, thank you, Dylan. Yeah, appreciate you joining us. Tensei Forex, just look at the opposite of the US dollar, my man, right? So if dollar is bearish, let me go ahead and show you guys. I know we have new folks coming in all the time, right? So at the key level I gave you guys last week that we were watching on dollar, I was then able to see Wednesday going into Thursday that the market's bearish. You're then able to use that insight to look for higher prices on euro and higher prices on pound. How do you know which one to trade? You want to go to the cross and look at euro pound and look at the order flow, and that's going to tell you whether or not pound is going to be a better long or if euro is going to be better long there, right? So it's all about understanding intermarket analysis, especially with the currency market. And that's why currencies take an extra step of analysis, because you have to weigh out a lot more factors as opposed to just trading stock indices. So that's what I would do for currency trading. So looking for higher prices on euro, we have this nice swing high here, and it's even better that it's relatively equal to this one, right? So we have relatively equal highs there. These highs are begging for it on euro. Looking at pound, pound's already taken out this high here. So we'll look for this high here on pound, right? So it's just going to be the inverse of what we're seeing on the US dollar, right? And since we're seeing bearish market structure here being priced in with this intermediate term high, order flow confirming it, looking for the lows. Do you still include the volume imbalances with the fair value gap if the wicks pass the consequent encroachment? Yeah, so if there's ever a volume imbalance as part of a fair value gap, I'm always using the volume imbalance, absolutely. Reaper Dylan, can you show a change in state of delivery on the daily time frame? Yeah, let me go to so because we haven't been in expansion profile, there's not a recent change in state of delivery, so I have to go to one where we are in expansion, right? So when you're learning the PD arrays, certain PD arrays form in certain phases of price delivery. So in a consolidation, you're not going to get order blocks on the higher time frame because it's not expanding. But here we have a last down close candle that took out sell stops. We get a displacement with a fair value gap and a market structure shift. Three things to qualify high probability order block, or as you're saying, the change in the state of delivery. Last down close candle here, extend that through, market trades down into that. That's a bullish order block. A lot of ways you can trade it. If you're really bullish, you can buy as it's leaving it here, or you can buy it as it recapitalizes on the liquidity inside that bullish order block to the upside. Just an example of a change in state of delivery on the daily time frame as requested. Alessandro, thanks for the previous answer. FOMC on Wednesday, do you act like it was FOMC report? No, absolutely not. It's not as heavy as the actual FOMC meeting. All the minutes is, I think it's just like a summary of what they've discussed in the previous meeting. So it will bring in some volatility, so it'll make a clean PM session, but it's not like FOMC. FOMC is a showstopper, right? The morning of FOMC is usually absolutely trash. And even the day before, I'm mindful of trading the day ahead of a big news driver, but FOMC minutes, business as usual. Can you look at gold? Absolutely. Yeah, let's take a look at gold. Man, gold's been ripping. I was having conversations with my family because I was, tooting the horn to buy gold. And there's a lot of factors why. If you understand anything about fiat currency, I'm not going to go into all that here. Like I said, I'll go into a 10-15 minute tangent on fiat currency. But if you're interested in it, do some research on fiat currency, what that means, what that is, and you'll understand why gold is trading higher. A lot of people are wanting to put their money into a real asset that's not going to lose value like gold, while fiat currency is losing value very quickly. So because the devaluation of the currencies is happening at such a high level, a lot of capital is pouring into the metals market, more specifically gold and silver. So gold, extremely bullish. We're at all-time highs, looking for higher prices on gold. And the fact that we're seeing the dollar trade lower is going to allow gold to even continue accelerating to the upside. So because we're at all-time highs on gold, it's all-time high protocols for this market. So what I'll be looking at here is we have this fair value gap here for gold. We'll have to observe, let me make that a different color. This fair value gap here, have to observe how we trade there. If we're bullish, we want to see it remain supported in here. There's no inefficiencies here. This is all balanced price action with how it was delivered here. So the only inefficiency would be here. So we should not lose this level if we're going to remain bullish longer term on gold. So I want to see us stay above that. If we lose that level, then that changes things slightly, and then I'll have to reassess at that point based off how we trade there. Looking at the daily time frame, see the market's reached higher, significantly above that high. So it's reasonable to see it retrace. And again, use that weekly gap. There's also this down close candle in there as well. So a couple of levels nested in there to use as a key point of interest moving forward on gold. Gold's not an asset personally I like to trade as much, but for long-term investment, long-term investing, or putting a portion of a strong believer in gold long-term. Trading it personally, not something I like to do as much, but nonetheless, it is a good investment long-term in my opinion. However, do your own research. Like I said, look into fiat, look into what that means, look into what's happening with the banking system, and you'll be able to understand why gold is a no-brainer investment for the long run. And also, I will mention, gold has been artificially suppressed for a long time. So I think once we see gold reach its fair valuation or its true valuation, gold is absolutely going to rip on the upside. Looking at gold right now, it looks like they're going to want to make a run for these sell stops here. That'd be reasonable, right? Because the market's been going up for a long time. So it'd be reasonable to see them drop it down here below a short-term low, accumulate some sell-side liquidity. So what we'll have to watch on gold, I love how they left these equal highs here. So that's likely just selling off, baiting people into thinking it's going lower, and putting buy stops up here for the market to continue higher. So look for this swing low here. Understanding the concept of displacement. Is the market displacing through lows, or does it trade down through these lows and then reject to the upside? Or does it displace down through the lows and continue bearish? So reading order flows, seeing how we trade at key highs and lows is going to be essential for being able to read whether order flow is bullish or bearish. So that's what I'll be watching there for gold. And hourly time frame, yeah, we have these lows here relatively equal. Nice breakaway gap up here, so I suspect they'll want to clean out these equal lows here for gold. And then, like I said, you have to assess how we trade there. Zeus, silver futures market has been absolutely fantastic last week. Check it out. Yeah, let's go and take a look at silver. Yeah, silver's moving a good amount. Yeah, so silver traded up into this bearish order block here. This is, or actually it's a propulsion block because this is the order block here. This one traded into it, so this is the propulsion block. We traded up into that. Nice rejection to the downside. So looking at the hourly chart here. Wow, wait 1 second. I want that order block to be there on the lower time frame. So since we traded up into that daily bearish order block there, nice rejection to the downside from that level. So in my opinion, the draw here is going to be the sell side liquidity. So I see us going to $31.60 an ounce for silver. Absolutely. Silver's starting to move clean, low resistance liquidity run. This is good price action to trade. If you can avoid this, I would at all costs. But now since it's expanding, silver probably will be pretty good for opportunities for trading. Personally, my focus is mainly on indices. If I will trade something else, it will be crude oil. But if it ain't broke, don't fix it. So I'm not hopping around to a lot of markets to trade. But if there's opportunity, then I want to be all over it. So that's how I look at these other markets. Sky, well said, brother. Thank you so much. Yeah, appreciate it. Thank you. FX, I'm also trading with ICT. Not a bad call. Not a bad call. Stratking, can we get your opinion on YM? Yeah, I would have shared it. I'm not seeing a lot on Dow right now. If you look at the daily chart, yuck, really nasty. If I will say though, if we see Nasdaq and S&P trade higher, then that will pull Dow up with it. But as of right now, we're in this nasty consolidation. And if you look at just how the Dow's been trading intraday, in my opinion, it's one of the harder markets to trade. So that's why personally I stay away from it. So I don't have a whole lot to give you on Dow. Reaper, thanks, my man. Yeah, my pleasure, brother. Alessandro, thank you, sir. Yeah, glad to be here with you guys. Alrighty, folks, that's going to do it here for me today. Really do appreciate you guys joining us. As always, we'll be here live every Sunday here for the rest of the year. I will be looking to do some live streams on YouTube. Maybe once I get what I'm looking for my trading. Maybe I'll look to do some tape reading on YouTube with you guys for some of the sessions. Maybe I'll look to do that once a week, pick that up going forward. Like I said, once I get what I'm looking at in my trading, right? Like, as you guys know, I'm a real full-time trader. So I am prioritizing the focus on my trading, making money with what it is I'm doing. However, once I do that, it shouldn't be a problem for me to go live on YouTube with you guys. So that's my intention here going forward. I know I've been saying that for a while, but I've had a lot on my plate. But it is something I'm looking forward to doing, hanging out with you guys over a New York either AM or PM session, tape reading, giving you guys some insights, hanging out with you guys, and maybe taking some questions. All right. So with that being said, guys, have a phenomenal rest of your Sunday. Mentorship group, excited to get to work with you guys, excited to deliver results. We'll be back to business here this week. So with that in mind, guys, have a lovely rest of your weekend. I will see you guys on the next one. Take care.